Welcome back to this channel. This is Unfiltered Forex with me, Clement, and I am here for the weekly forecast. I'm going to take a look at the events we're expecting this week, and I'm going to tell you, just going to show you what to expect and how you can trade these releases. On Monday, September 18th, there is nothing important we're expecting. Just a few speeches from some of the ECB members. Can expect some volatility on the euro, of course. On Tuesday, Reserve Bank of Australia meeting minutes. The Euro CPI is the this is the this is the Eurozone CPI for the whole Eurozone, not for any country in particular. This is just the aggregate for the Eurozone. As of course, this one the market is expecting a slight reduction. The CPI for Euro for the most part has usually been flat. The year-over-year changes. Let's look at this chart. Yeah, for the past few months. Yeah, this is since early this year. Yeah, since early this year, 5.2. We started at 5.2. This is the final release for January. We started at 5.2 and then peaked at 5.7 and then now we're still at 5.3. So there hasn't been a significant change in the year-over-year consumer price index. This is the core consumer price index. Yeah, there hasn't been a significant change, and it's not exactly encouraging to, of course, to the central bank, but it shows like, yeah, they are trying to get inflation under control and it's going to take some time. So this one is kind of a neutral release, except that if these numbers come out above estimate or below estimate by far, of course you can expect a lot of volatility there. But considering that this is not the preliminaries, we already got the preliminaries and now we're expecting the final release, it's likely that it's just going to be within this range, 5.3, 5.4 there, or maybe even 5.2, but no big difference. So back here, yeah, that was the core CPI, the CPI month over month, CPI year over year. This is another number. Mostly, yeah, this one is consistently falling for the most part since late last year. Yeah, it has been on a downtrend, and it looks sustainable, and it's very encouraging to see this because, yeah, the European Central Bank are probably going to consider pausing in the next meeting, or maybe just doing away with this tightening cycle altogether. They say no more rate hikes. So yeah, that all depends with how this is going to play out. And as you can see, currently the market is expecting 5.3%. Same with the previous month's reading. Same with the July reading. Yeah. So this one, you shouldn't exactly expect a significant change because the preliminaries are already out, and this is usually the more volatile one. Once the actual is released, it's usually almost the same to the preliminary. So yeah, here you can see there's a history of usually just being within estimates or just miss the mark by 10 basis points or 20, like in this case. So yeah, this one shouldn't expect too much. Moving on Tuesday we have the building permits for the US. Building permits, August. Housing starts for August. Housing starts, this is the percentage change, and then the number itself. Yeah, these housing numbers are big for, they serve as leading economic indicators for the US economy. They are very important because, yeah, buildings are big investments. Yeah, you need a lot of money to start and to probably just fund a building project. So yeah, it's used to measure the strength of the economy in general. And yeah, so this is a leading economic indicator. I'm sure you watched that video where I talked about leading and lagging economic indicator. If you didn't, the link should be popping up somewhere. Go check it out. So yeah, this is important to look out for. Another one. No, I mean, yeah, on Tuesday, nothing else big. Okay, these are JPY numbers. These are big for be trading Japanese yen. But during this hour, not it's not exactly a good idea. So on Wednesday, we have the People's Bank of China loan prime rate. You can ignore that one, and then we have the pound, the CPI for the pound, CPI month over month, CPI over year release. So let's look at this chart. You see the trend. The trend is what we're concerned about. Yeah, so since late last year, since late last year, the CPI for the pound has been decreasing steadily, not consecutively, because there was this one time there was an uptick. Otherwise, it has been on a steady decline, and it's kind of good to see that. Good, I mean, for the central bank, the Bank of England, they kind of want to see this sustained drop in inflation numbers so that they can consider pausing rates or maybe just stop hiking rates altogether. Here the estimate is at 7.1. We're expecting a slight uptick from the previous reading. We'll just have to wait and see how that one comes out. So yeah, that's a wait and see kind of thing. Moving on. Yeah, there's the PPI for the pound. Moving on, there's some ECB speakers here. I haven't checked that calendar. Let me check that calendar. In fact, I will not procrastinate this anymore. Here we are. This is the calendar given by the European Central Bank on their official website, and yeah, you can see there's some events here. On Tuesday, 19th September, there's board member panel participation 10th Banking Union Conference organized by. Okay, this is kind of important. This event, it looks like it's something to do with banking and monetary policy stuff. But scrolling down a bit to this other one, Wednesday. Yeah, this is where most of the members will be speaking. Introductory remarks for joint workshop, European independent financial institutions, panel remarks, supervision, innovation center, banks. So this is nothing to cause alarm. Yeah, it's nothing too important. Let's do this. So yeah, nothing too important going on there. You can ignore them safely. But just for just because these markets are unpredictable, just stay cautious if you'll be trading the euro on Wednesday. Yeah, this is on Wednesday and on Monday today. So yeah, moving on Wednesday, still you can see interest rate projection, FOMC economic projection, FOMC statement, Fed interest rate decision, FOMC press conference. So on Wednesday is when we have the Federal Reserve interest rate decision, and yeah, the FOMC statement is also coming out. And of most important in this kind of uncertain macroeconomic environment, economic projections, the summary of economic projections. I'll have to do a separate video talking about these things because it's it's a big report. I'm sure you know this. The projection materials. It's a kind of big PDF, and we need to go in depth, look at the numbers that market participants will be watching out for. Usually, the important one to watch out for is the unemployment rate, and then there's the terminal rate, of course, the projection terminal rate. Okay, I'll do that in a separate video. So for now, we'll just have to skip that. Just take note, yeah, we're expecting the Fed to pause. According to the table of probabilities currently, it's expected that, oh my god, yeah, there's a 99% chance that Fed is going to pause at this coming meeting. So you can see this is the current rate, this is the current target range, and this is the next one. This is a 25 basis point hike. So target rate in basis point. This is current and now, and yesterday, no, this was on Friday, and then 1 week ago, and then 1 month ago. So you can see these probabilities have come increasing till now. There's almost 100% certainty that the Fed is going to pause this coming meeting. So yeah, but that's not where you should focus on. The probabilities table, of course, is where you need to be looking at for to get that long-term perspective. So you can see the market is expecting a very long pause. We'll wait for the Fed, the FOMC statement, the projection materials, the press conference, of course, to see if these probabilities will change, to see if the Fed will is planning to hike again or just pause for longer than the market thinks. Okay, so that's that for now. Let's move on to Wednesday, Thursday. We have the Swiss National Bank interest rate decision. This is for the CHF. Swiss National Bank interest rate decision. You can see they're expecting them to hike by 25 basis points. These guys only have 4 meetings in a year. Yep, they only have 4 meetings in a year, and that's how it is. So this is now the no this is going to be the third one. No, it's going to be the third one, and then they're going to give guidance about the future path of monetary policy, and then we're going to see what's going to happen. So currently, we're expecting an interest rate hike of 25 basis points. Yeah, should if it of course if it comes out as a pause, their currency is going to be weak. The Swiss franc is going to be weak. If it's a hike and probably they maintain a hawkish tone, of course that's going to be bullish for CHF currency. So back here on Thursday, still we have the Bank of England monetary policy votes, Bank of England interest rate decision, Bank of England monetary policy committee meeting minutes. So this is going to be very important. Currently, you see the market is expecting them to hike the rate. So this is something you should definitely watch out for. The market is expecting the Bank of England to hike this interest rate, and the probability that they will pause is also there. It's also there, and it's it's quite significant. It's not something you can ignore. There's there's this there's this clip. Yeah, it was there's this day. It was on 6th September. Wednesday, 6th September. In fact, let's go back there. Should we? No, no need. So about that, I'll have to do a separate video talking about this Bank of England interest rate decision and what you should expect coming here. But currently, the base case, as you can see, is the market is expecting a 25 basis point hike and most probably a dovish stance or just a dovish hike. Maybe they hike and say we're not going to hike again. So in the separate video that I will do, it's going to be very short. We'll look at the highlights of the recent Monetary Policy Committee, Treasury Committee hearings and hear what Governor Bailey said about this interest rate hike. So, moving on, initial jobless claims, Philadelphia Fed Manufacturing Index. So, by this time, we have already gotten the most important releases of the week. If we continue on Friday, this is the Bank of Japan monetary policy statement and Bank of Japan interest rate decision. So for the Bank of Japan, and then the press conference later in the day. So about this, it's usually a very bad idea to trade this. I can guarantee you will suffer. you're very likely to suffer if you're going to trade this, because in as much as, okay, so first we're expecting the Bank of Japan to hint at intervention in the FX market, because the USDJPY has gotten so weak and it's almost reaching 150, I believe. Yeah, so we're going to see if the Monetary Policy Committee is willing to perform an intervention, or they just hint at an intervention coming soon. Of course, that's going to mean strength. The currency is going to be strong in the short term. Otherwise, the monetary policy statement, if there will be significant changes, you can expect volatile price movements, and volatile in the wrong way, because the way these JPY pairs move, it's not advisable to trade the news on the JPY pairs. But okay, on top of that, they usually don't release at the exact time. Sometimes, okay, maybe 1 in 5 cases, they release their statements at the scheduled time, but many a times they usually just don't release within the stipulated time. They release either earlier or later. Usually it's later. So that's usually something that is a big bother. Is very troublesome if you're going to. Very troublesome if you're going to trade that. So moving on, there's core retail sales for the pound, and yeah, you can just ignore that one for now. No need to go deep analyzing that one. And then yeah, the Bank of Japan press conference, and then here we see the S&P Global PMIs. Yeah. So this is for both the euro, the pound, and of course the US dollar. So this is a preliminary release, and it's going to be very volatile. It's usually very volatile than the actual release. I'll not say the reason right now. So yeah, this one is usually very volatile, more than the actual release. And yeah, the market is going to be looking out for this one and see what's going to come. So now let's go to the chart. We have to look at the charts of some of these things. Here we are. We'll look at this first, the euro versus the US dollar. So it's a downtrend, and the downtrend is still looking very strong. And of course, I'm sure you saw the video I did last week about the recap of the big events we got, explained why, according to the fundamentals, this currency, the euro, is likely to get weaker. So yeah, this is what I was expecting at that time, and you can see price just made that retest, and then now it's falling. Yeah, and it's likely to continue like that for the rest of the week. But of course, that remains to be seen. Some things might change and the trend changes, but currently it's still a sell. So that was it for that one. Didn't need to say too much about it. About the intraday entries, you can get them yourself on the lower time frames, of course. So something else you look at is the dollar index. Now is let's do this. Yeah, this is the best time frame when you're looking at this one. So yeah, of course, the dollar index here looking very strong on the back of strong economic data that has been coming in, and also, what do you call it? Yeah, interest rate expectations are remaining high. So yeah, the dollar index is likely to continue being strong for some time. You can expect either, yeah, this week it's likely that this high is going to be taken out. Yeah, this high is going to be taken out probably, and price will just make a small breakout there. It's very likely at this point. So just wait for that one. Once that breakout happens, of course, just like this breakout happened and just like this breakout happened here, just wait for a retest and then continue. Buyers are going to continue probably to this other level. So yeah, that's something to watch out for. Yeah, even in fact here the first breakout was here because we were expecting price to I was expecting price to make a retest and then continue falling, but the fundamentals shifted and price continued rallying, made a small retracement, like a retest there. Let me see. Price made like a small retest there and then continued rallying. And then here we had another breakout and then a retest, and then price again made this breakout and then this breakout, and then probably this will be the next one after this one. So we're just going to wait and see what price will do. From an intraday perspective, of course, price is looking. You'll get you'll get the short-term intraday entries without much hassle. Yeah, this was like last week, for example. Even in fact, this was the previous week even. I was expecting this upward impulse to go up to this high, but it didn't. It only went halfway upwards. This was just a retracement. This is a continuation pattern. It's called a symmetrical triangle. So yeah, it was just a clean continuation pattern, and then the impulse came. I can't remember exactly what economic data was being released at this time. I remember it was the ISM services PMI on 6th September here. Yeah, that time is when this impulse came. And then very recently we had this long retracement and then an impulse came. This was on Thursday. On Thursday, this is where we got the PPI, the retail sales data, the jobless claims data, and then the European Central Bank interest rate decision. So all those events collided within the hour, and there was this big impulse. It even went past my target. I was expecting it to kind of stop here, but it went and ended the day this high. Yeah. So now we're seeing like a small retracement, and then this price is very likely to continue rallying with up end. Yeah. So if you do this, then you do this, then you do this, it's like price is like showing you this is a common support zone, but if it fails, we still have this one. So you can either buy here or buy here. The buys here is after this one here has failed. And then profit target, of course, you just target a new high. Yeah, because it's very likely that price is going to make another significant impulse one of these fine days. So yeah, that was it for this video. I don't know. Of course, the Japanese yen. Before I forget, USDJPY. So yeah, this is the USDJPY chart. If you first take a look at the daily chart, you can see this was this was last year, right? This was last year when the yen was reaching 150, and then the government announced something to do with an intervention, and then there was that significant decline in price. So since then, there's been some laxity on the side of the Bank of Japan, and of course on the side of the government in general. They have allowed their currency to get weaker over time, and yeah, we're expecting probably some other news about an intervention, and we're going to see what's going to happen. So over the next few days, next few four, yeah, over the next few days, it's likely that this this is going to fail. It's going to fail, and price will shoot upwards again. Uh-huh. Form a new high, probably make a retracement, and then just continue rallying. until something happens. That something is going to come from the Ministry of Finance or the central bank even. And yeah, but for now, this is going to remain weaker. Just look for buys on an intraday basis, of course, and just be very careful of why as you trade. I think I'm seeing something here. Let me go to a smaller time frame. 1 hour. I think I'm seeing something here. Not very confident in this one, but yeah, it looks like a really good buy setup. So if you just decide to long from this point and have your stop loss here, it's not it's not exactly a very bad idea, since considering how weak this currency is, it's probably likely to be a valid setup. So with that, I'll end this video here now. So yeah, I hope you learned something. Wait for those two videos. I've said they're coming separately. The one talking about the Bank of England monetary policy Treasury Committee hearings that happened on 6th September, and how that's going to affect the coming interest rate expectations, and of course the FOMC, the Federal Reserve monetary policy decisions, how what the market is expecting them to do and what's likely to happen during that time. So yeah, see you at that time.